I'm here with Justin Ablow, Managing Director at Houlihan Lokey. So nice to see you here.
Thank you, Rhonda. Good to see you.
Private equity has always got interesting developments in it. And when you look ahead to 2016, what are some of the developments you're watching this year that will be key?
It's a good question. I think in commentary, it's common to say that an industry is at a crossroads. I don't think private equity is at a crossroads. I think it's walking down a very long road. I think a lot of the trends that are playing out today are trends that have been in motion for a very long time. I think one of those is increased specialization across a number of metrics, industry, strategy, size. I think there's increased consolidation in the industry. I think there's increased consolidation among service providers as well, certainly increased consolidation among middle market investment banks. On a good day, we're beneficiaries of that. Not every day is a good day. And there are really major changes afoot in the way that leveraged transactions and sponsored transactions are financed on the debt capital markets.
All right, changes how and why?
Well, I think one thing that's happened is the large banks have really withdrawn from the space of financing middle market or even upper middle market leveraged finance transactions. That's being driven by regulatory pressures as well as market pressures. And I'm reminded of Ross Perot's famous sucking sound as those banks leave, nature abhors a vacuum, and very savvy new players are arriving, direct lenders and others. And it's interesting to watch an entire new ecosystem forming around those new lenders. When I think of the changes that are taking place now in private equity and the ones that we as a firm are willing to kind of put our money where our mouth is and really respond to with investment, that's of time as well as capital. That's one of the big ones. We've built a big finance practice around intermediating between the users of capital and these new alternative lenders. Another area where we've invested very heavily, I think in response to what we see as a major trend, is we've built a strategic consulting arm, which is very unusual for an investment bank. I think it's unique, and we've done that in the firm belief that it is increasingly important for private equity firms and for their returns that they move value levers inside of companies during their ownership period. They can no longer rely on purely financial arbitrage if they ever could, and they need to think long and hard about how to improve operations at businesses. We try to help them with that.
And how do they do that on the execution front? What was lacking before that you saw the opening? Was it not concentrating on long-term value? Was it looking more at finding a good value and an opportunity, but not really knowing once you had it, how to maximize it?
That's an interesting question. I'm not sure I know the answer. It's a little bit of both of those, I suppose, although I would characterize it perhaps a little bit differently. Owners, it's not that private equity owners were unmindful of long-term value creation, but when the low-hanging fruit of financial arbitrage was there, it's easy to take that. I think a lot of the low-hanging fruit has been plucked. It's very interesting. There's a very interesting dynamic. We're going into a lower growth environment from a macro standpoint, and identifying growth has now become much more important. Putting aside operating changes in companies, one thing that we certainly see is where we are selling companies with really demonstrable growth, particularly if it's that funny magical unicorn defensive growth. There's a pile-on effect, right? Assets that are that attractive are seeing a huge amount of attention in the marketplace, and we're seeing rather perversely in this environment really attractive assets, even as some aspects of the macro environment degrade, attractive assets being valued increasingly highly. And some recent large broad auctions we're running, and by no means is everything that we do at Houlihan a broad auction, but we do run them. We're seeing an absolutely unprecedented amount of interest in those defensive growth businesses.
Well, it's a fascinating time. Justin Ablow, glad you shared some of it with us.
Glad to be here. Thank you.
For The Deal, I'm Rhonda Schaffler.